have joined. Let's start with the session. A very good morning and welcome to our session on Future Proof Your Finances, a young adult's guide. Myself, Dr. Komal Pancholi, and we have with us our expert for the session, Mr. Sheel Mehrotra. He is the founder and managing partner of Prosperity Bridge Partners. Over a 26-year career, Mr. Sheel has held several leadership positions in mutual funds and wealth management. Based in New Delhi, Sheel heads a broad spectrum of product functions, including investment strategy and specialist services. As financial advisor and trusted partner, his role is to offer curated solutions to achieve clients' financial goals while exhibiting the highest standards of conducting service and maintaining confidentiality in dealings. He has over 2 decades of experience gained at ICICI Prudential and Kotak Mahindra Asset Management and Sanctum Wealth, while also worked in advisory role at ICICI Bank Private Banking. His most recent position was senior partner at Incred Wealth. Sheel holds a wealth, sorry, Sheel holds a bachelor degree in economics from Lucknow University. He is PG diploma in business finance from Indian Institute of Finance. Prosperity Bridge Partners is a team of professionals in the financial services, including mutual funds, banks, and wealth management firms. This firm offers services related to financial products, retirement, and financial planning. So over to you, sir. Now it's you who would be taking the charge from here for this particular webinar. Over to you, sir. Welcome once again.
Thank you, Komal. Thank you, and good morning to everybody. On a Sunday morning, 100+ participants is a good thing to see. After a weekend, anybody would want to join this session is very interestingly because all of us are concerned to money. So thank you so much. I'm happy to connect with the audience, amongst which many should be, students who would hit job markets in a couple of years. There would be a lot of young professionals who have just started working, earning, and they have aspirational spends on their mind, certain, short-term goals, marriage in few years, certain assets to buy. And then I'm sure we would have, mature couples in the amongst the participants who would have, families where young children, parents, all of them to support, and a lot of other things besides for their own selves. So I'm happy to connect with all of you this morning. Thank you. So as the topic says, wealth management and things around it. So let's first take up this thing only. What is wealth management? So let's start with few basics. Wealth management is all about helping people manage their money, grow, and protect it. See, it involves certain stages which involves professional advice on where to invest money. There are various asset classes, equities, gold, bonds. So where to invest money? How to save taxes is very important part of wealth management. And then there are people who would be planning for short-term and long-term goals, like somebody planning for retirement, somebody to buy an asset, somebody's children's education on somebody's their own marriage. So planning for certain goals in life is also a very important part of wealth management. Then you should be buying insurance. Where would you land up after 20, 30, 40 years and your whole family depends on you? There should be a safety cover. So buying an insurance, which insurance cover, health, life, that also involves some important aspects of wealth management. And then very basic thing from where we should all be starting is handling emergencies. अगले 6 महीने 8 महीने का एक ऐसा कॉर्पस हमारे पास होना चाहिए. If you were to sit idle or if you want to plan for something big, then we should have that emergency fund with us. So wealth management in totality, involves where to invest, how to save taxes, plan about your immediate goals, buy insurance, health, life, handling, and also some other aspects for very senior investors would be, what do I do in estate planning? I have grown up children, I have big business. How do I hand it over to people? So how to plan about it? एक जनरेशन से दूसरे जनरेशन में जब वेल्थ ट्रांसफर होती है उसके क्या न्यूएंसेस होते हैं, एस्पेक्ट्स होते हैं. So wealth management is a lot about these things which in my career of 25 years I've been learning till date. and Western markets are more mature, but Indian markets are, catching up the pace very fast. So you got to learn in this each and every day. So today we'll be talking about various nuances of wealth management, especially for young professionals who want to build their career in this space. I've been working for 25 years in financial services, started with Aditya Birla, and now where I am as an entrepreneur. So we'll discuss, and any questions in your mind, just keep writing. Let's have a discuss at the end of this session. So now, in anybody's mind, for young professionals, why should you consider a career in wealth management? So I would say all of you would know that India is a growing market, very very rapidly growing market. If I were to give you statistics only about mutual funds, you can go and read on the websites. Our mutual fund industry has grown to a size of 72 lakh crores. I'm not even talking about bank deposits, which are, 5, 7 times bigger in size than this in a country where savings are so important. And if you go to Western markets, they are almost, more mutual fund companies than they are banks. So India is a growing market. If you were to look if you read various wealth management reports in recent past, you would get to know that uh, number of people who are very rich, maybe in certain parts of the pocket in different geographies like US, China, but India is emerging very fast. It reflects in the economy. We were 10th 10 years back. We are 4.2 trillion today. We might be third. Third means a leap of another, $3 to $4 trillion from here. So in this growing market, there is a scope for young professionals who want to build their career in wealth management. So there is a meaningful growing demand. Then please understand wealth management is not about products. I don't do products. When I meet with families, my endeavor is families, whether they are charitable trust, whether they're institutions, whether they're corporates. I need to understand what does their need and then fit the right investment product. There are people whose savings they have plans to achieve in next 10 years, 15 years, 20 years. If they choose right, wrong investment products, how would they reach? You go to a doctor for your health. Likewise, financial advisors are financial doctors. When you sit with them, you gain clarity where to put money, how to make it more optimized, text planned, and how do I achieve my long-term and short-term goals. So it's a good career to be in. And then there are a variety of roles which you can pick and choose. Now you can go to banks, let's put an example of an ICICI bank. Do you imagine they have 7,000 branches? They're adding 3,000 branches every year. They need financial, students who have background of financial products, who have done certain basic education like graduation. Then there are certain courses which are floated by National Institute of Securities Management, NISM, which like doing 5A NISM 5A for mutual funds. Then there is something for PMS. Then there is something for derivatives, for insurance. So her एक investment product or genre के लिए there are courses which our regulators and education providers are coming out with, and you can go through that, acquire those skills, and then work for banks, financial startups, म्यूचुअल फंड कंपनीज. आज अगर आप समझते हो 72 लाख करोड़ की अगर ये म्यूचुअल फंड इंडस्ट्री है, they would have employed at least 20-25,000 people. If this industry were to double, if banks network have to double in India, or maybe go big pace, they would need a lot of young professionals like us, like you, who are going to hit job market. So you can take this journey of your career in wealth management or financial services very seriously. But guys, you need to prepare for it. Nothing just comes easy. So I mean, this is right time that you can do multi courses. So there is a lot of scope for that. So banks, insurance companies, fintech startups, mutual funds, and rather you can choose to become an independent financial advisor. You can have your own practice. So there is a lucrative career, and believe you me, guys, if you're doing your right things, money will follow you, money will chase you. But we please remember something which I've always, remembered as a principle for myself, that we are in fiduciary services. Fiduciary means somebody's, money is in our hands, like somebody's life is in the hand of the doctor. So somebody's hard-earned money is in your hands. You have to do your job very honestly, in the best of your knowledge. Money will follow. Earnings will follow. If they earn, you earn. That's the business we are talking about. So for young graduates, if they want to start, their journey in the field of financial services, you need to go through certain things like basics of finance, understand what are savings, investments. Personal finance sections are amply available anywhere. You go to Money Control, Value Research, Morningstar, you go to Google, आपको पर्सनल फाइनेंस के ऊपर बहुत सारे टॉपिक्स मिल जाएंगे पढ़ने के लिए. In all anybody would say is that you should save before you spend. You should save your earnings into investments. You should change your savings into investments, and while you are growing in investments, you should protect yourself. So that's the basic, principle when you want to be a financial services person. So for young graduates, you should learn lots of basics on finance, which is available on websites. You should read books. There are YouTube videos. Even I watch a lot of YouTube videos. They are good, trainers. आपको derivatives पे सीखना है. What are stocks? As basic, what are bonds? Bonds कैसे value करते हैं? Mutual funds क्या होते हैं? कितने तरह के होते हैं? बैंक में अगर आप डाल रहे हैं तो सेविंग्स लॉन्ग टर्म शॉर्ट टर्म, अगर आप लोन दे रहे हैं, देयर आर टॉपिक्स एंड टूल्स अवेलेबल फॉर एवरीथिंग. During the course of this interaction, I'll take you to my website where I'll show you some basic tools. अगर आपने आज शुरू किया सेव करना, आपने 1 साल के बाद किया, 10 साल के बाद किया, कितना बड़ा डिफरेंस आ जाता है. So when you start saving by your own self, you realize this is so important. Now, best ways to, you should start saving your own money. You can't learn on somebody else's experience. So open a savings account, which I'm sure in this world today, everybody would have a savings account. Then you start a SIP, very small amount, 500 rupees a day, 500 rupees a month. All of us can afford. Even if you are students, you would have some money to, to save. There are various people I have come across whom they say that, they have been doing investing since their own childhood times. Aaj, my, son has just cleared his class 12. He says he has a group of friends who do, advanced investing strategies. They go to different countries to represent themselves. They talk about investing strategies and they come out clean. The best amongst various minds across the globe. So there is no age while you can start to, read about these important topics. So, but before that, guys, build an emergency fund for at least 3 to 6 months. After being a student, let's say you go to job market, you may find your job in some time. Till that, if you want to be independent, and even if you have started earning for first few months, save whatever and start building an emergency corpus. 6 से 8 महीने, and this goes for everybody. I mean, for me as well, when I was moving out of my job to start my own practice, I wanted to save some money for next 6 to 8 months. So build an emergency corpus. It has a lot of importance. And then you start saving and protecting yourself through insurance. So besides, in early part of your career, you should buy a health insurance. Emergencies, health emergencies can come anytime and they cost you a hell. So you should start saving for that as well. So when you are young, the insurance premiums are very less. When you're saving for your life insurance, तब भी आपका प्रीमियम इनिशियली बहुत कम आएगा. अगर आप एज ब्रैकेट 25, 30, 45, 50, suddenly there is a big spurt, and inflation की वजह से भी your premiums go high. So these are important things. Build your emergency corpus, buy health insurance for you and your family, and life insurance plans initially, and then fill it, shut it, and keep it, and start saving smaller amounts or whichever way through SIPs. Understand your asset allocation. Now this is big word. Asset allocation क्या होता है? See, when you have food, you have different kind of, carbs, fat, vegetables. So ऐसे भी asset allocation होता है among them, various financial products, equities, bonds, mutual fund, structure products, offshore investments, derivative. So these are various. I mean, अगर आप between rich and wealthy, rich guy will say, I have a house in Maharani Bagh and I have 4 cars. He's talking about a house which is self-consumption, which is not going to sell. So value is zero. Car is a depreciating asset. You can be rich, but wealthier guy would only think about wealth is about, growing something with time. I would invest into something like equities, which will grow with time. So when you are young, you can take on riskier assets. Every asset has its own risk profile. Risk matlab kitna variability of returns, not the permanent loss. Variability of returns is we called risk. और so वो आपको समझ में आएगा. So एक thumb rule क्या है? 100 minus your age. If you are 30, probably you can add 65-70% of your money into equities, and then 10 to 20% into fixed deposits, PPF. Likewise, if you progress in age, you have family to support, your risk-taking abilities, might reduce a bit, or you would do it willingly. So 5 and 10% you can put money in gold. There are cycles of everything. अभी आपने देखा ना पिछले 2 साल में जब से यूक्रेन रशिया वॉर शुरू हुआ, then US president came, he started imposing tariffs. Suddenly, currencies of the world, equity asset class and other asset class, started coming down in value. What made sense to anybody was gold, which appreciated from $1,800 an ounce to almost $3,500 an ounce. There are other precious metals like silver, offshore equities. You can't put all your money in one place. So you can design a plan and thumb rule to understand how should I start. 100 minus your age. If I'm 45, probably I might have, 50 to 55% of my money in equities. So this is how, you can start your plan in financial services, your career in financial services. And then you can continue to review your portfolios every 6 months, 1 year, 2 year, whether it is going as per your plan, whether it is yielding returns. अगर markets बहुत ज़्यादा बढ़ गए, आपके portfolio की value आपने 70% equity में डाला था, 80%, 95, 80% हो गया, 85 हो गया, you can bring your equities down. So this is how you can start your career in wealth management space. Komal, over to you if you have a question here.
Yes. Thank you so much, sir, for letting us know that the early start at a very young age, how it is important to plan your all finances and everything, and letting us know about the asset allocation. My
Yeah.
question to you is that in today's volatile market scenario, how often should young investors review and rebalance their asset allocation?
Yeah, very important question. To begin with, asset allocation simply means that you divide your money among various type of investment options. Equities, stocks, you can do it through mutual fund, you can buy direct stocks. There are a lot of other ways to, buy equities. So equities is one. Debt means something which has fixed return coming to you every month, every quarter, every year. So you can put money to fixed deposits. You can put money to bonds. Gold is third very important asset class. Real estate is another. As long as you're not living in your own house and you're counting it as your real estate, you can invest into other. You can buy land, you can buy residential apartments, and stay put with that till the prices rise. So anything which grows is part of wealth strategy. So asset allocation means you divide your money into different asset classes like equities, bonds, gold, real estate, and so on and so forth. So it is like creating a balanced meal, something which we spoke about. So for young adults to be aggressive or conservative, it does not only depend on your, financial quotient. It also depends on your emotional well-being. Sometimes, you may want to invest money in equities and markets go down, and you may not, be easy with that. अभी जब कोविड के समय मार्केट्स 40% नीचे चले गए थे, it was a jittery feeling for us. There were a lot of people who felt panic, जिन्होंने पैसा निकाल लिया. Same time, there were a lot of investors, who saw it as an opportunity. जिन्होंने उस समय पैसा डाला और वहां से within 2 years, 3 years, they made 2.5, 3 times of their wealth. सोचिए. So there are two different cycles. कुछ लोग होते हैं that I can absorb my investment value going 10% down, 20% down, since you are a long-term investors. But if you're a short-term investor, your investment going down by 5% also hits you bad. So being aggressive or conservative does not only depend on your financial well-being, it also depends on your psychology about managing your money. So, I mean, so if you're 25, ideally, when you're putting money into equities, you should see, how it, how do you, sorry, if market goes down, how do you react to that chance of the market? So equities, why equities? When we say equities are long-term bet, आपको पता है कि सबसे अच्छा काम petrochemical business में Ambani's can do, Infosys can do on IT. So let's leave that job onto these corporates. Let's invest money with them. Either we buy those stocks if they are well researched, or we buy mutual funds. Leave money there, let it grow. So equities give you highest order of wealth creation, but that does that mean all your money should be in one basket? You would need certain money which can stay put, give you stable returns quarterly. आपको income आए, in terms of your interest. Uh, then there are certain asset class that performs with time. So for a beginner, in terms of asset allocation, you can put 60 to 80% of your money into equities, 10 to 20% into debt, 5 to 10% to gold and REITs. REITs are real estate investment trust. But at no point in time you should think that I should go 100% aggressive because I'm young and I can put all my money into stocks. See, that's where emotional risk comes in, which we just spoke. Now, you should keep reviewing your money. You should see whether your portfolio is going in the direction आपको चाहिए था 10% रिटर्न, मगर आपका पोर्टफोलियो 6 से 7% यील्ड कर रहा है. So you can sit with your advisor, if there are any changes to be done, you can do that. So review your portfolio every 6. Young people can review their portfolio at least twice in a year. So you can rebalance it. Now, adjust as per your requirements. आपका job आपने change हुआ, you get into marriage, you have higher responsibilities. Don't let your short term जो न्यूज आ रही है सोशल मीडिया पे आप देख रहे हैं ये स्टॉक बहुत बढ़ रहा है, उसको देख के डोंट फॉल फॉर इट. सो यू चार्टर योर ओन इन्वेस्टमेंट प्लान, डोंट फॉलो समबडी एल्सेस. मुझे लगता है कि सिर्फ आपके अगर पेरेंट्स के पास जाएंगे, they say that put my money into fixed deposits, that's the right place for them. But for a young guy who has 20-30 years of investing, you should put money or equities. Gold can run 10-12% annually. For if you see 10-15 years long term period, you would see that equities are compounded by 15-20%, gold is compounded by 10-12%, real estate is compounded by 7-8%. But then the real killer is inflation. If you put inflation into that, your earnings come down. So that is how you can review your portfolio and decide your asset allocation. So keep reviewing it and adjusting it every 6 months to 1 year. Yes, Komal.
Thank you so much, sir, for letting us know the importance of asset allocation and the time period for reviewing it. Sir, my next question to you is that many of us are not fully aware about what our risk appetite is, because risk plays a very important role. Risk appetite plays a very important role while analyzing our investments and asset allocation. So what are the simple ways like we young adults can access while accessing our risk tolerance capacity?
Yeah, I mean, understanding a risk profile, risk appetite, sometimes, let's understand, what is the risk tolerance? If we simply put, how much risk can I take emotionally and financially without losing sleep is my risk tolerance. If I lose 15% and I panic, that's not my risk profile. If I see opportunity markets going down 15% and I want to invest at that point in time, that's how it should be. So you can, it's about your comfort level when markets go up and down. For example, can you stay calm if your investments drop by 20%, or will you panic and withdraw everything? The honest answer to that will give you your risk profile. Then step number 2, what you can do is, in terms for risk profiling, how much risk can you handle when, based on your age also. You have long period, 15, 20, 30, 40 years to invest. You have long age, you can buy more equities. What is your income level? What are your financial goals? And most importantly, how you, react to different situations of uncertainty. That is how you get to understand your risk profile. So it's not about numbers game. As I mentioned, it's about psychology. Most young people, assume I'm young, I can be aggressive. But let me tell you from my experience, age alone doesn't decide your risk profile. So third thing that, you can use simple tool to assess your risk profile. But you don't need to figure it out. There are so many websites which help you to define it. You can, go to free online risk profiling questionnaires which are available at a lot of places. You can go to mutual fund websites. You can go to stock broking apps. You can go to personal finance platforms. and then they will ask you certain questions which you need to answer honestly. They will ask you basic questions like, what is your age, what is your income today, how much emergency fund would you need? That depends on your lifestyle. आपका एक महीने का खर्चा अगर 50,000 से 1 लाख रुपए है, तो it is actually talking to, save 6 lakhs, keep it aside first thing, and then think about other goals in life, whether it is buying insurance, health, life, and then investing for future. So, this is how you define your financial plans. Now, if you have once defined, there will be certain things which will be popped up to you. It will tell you, boss, you are a conservative investor. You can't see 15% downside. You are happy with 10% upside. Then there would be investor, so that will be a conservative investor. He will not put a lot of money in equities. He would say that I am happy putting 30-40% money in equities. Red should be in fixed income. So I am a conservative guy. Conservative could be even lesser. He might say 20% is good enough, and equities which can kill inflation and give me a real return. 20% is good. But a moderate investor can say I can have a balanced kind of profile. 50% equities, rest in gold, bonds, and fixed deposits. But an aggressive guy who is hungry for growth, doesn't feel happier lesser than 20-25%, may buy equities, may small caps, companies which are good. Abhi aap dekho na, none of these companies like Infosys can grow 2 times, 3 times in next 10 years. They're already 5 lakh, 8 lakh, 10 lakh crore in size. There are small cap companies which are, 20,000 to 2 lakh crore in size. If they're good business, they can double themselves in a couple of years. And that kind of compounding, those returns, if you're looking at, objectively, you should invest into mutual funds or stocks which cater to those. If you are a thematic investor, you like energy, if you like consumption, which is one big thing today every fund manager is talking about. If you like banks, you are an informed investor. Today you can pick up mutual fund portfolios which are dedicated to these themes. Then there are portfolios which invest into everything. 30% I would put money into top 100 companies, then 200, 250 next companies which are mid-sized companies. So there are fund managers which will, make curated portfolios based out of these themes, market caps, and then they will, ask you to come and participate, stay put for 4, 5, 7 years, and you achieve your financial service. So there are different kind of investors. All I was wanting to say that I explained is they're conservative investors. Their asset allocation will be different. For a moderate guy who looks at 50-50 amongst both the universe stability and gains, he will have a different kind of investment profile. And then there are aggressive investors who are young, probably in this group, who have small savings. They can put money and leave it in the hands of those industrialists who can grow wealth of the country. Now we are growing in GDPs because of these people who have ably done their job. So if I don't understand that market, I can choose those vehicles which are investing into these companies which are growing at a CAGR, cumulative growth of 10, 15, 20, 30%. So this is how you, categorize yourself. Now then, step number 3 is that you should align your risk goals. Even if you're aggressive, not every goal should be handled aggressively. If you have a short-term goal, you want to buy a bike, a student may want to buy a laptop, and parents have given him some savings, then you should better be putting that savings into a bank account or a fixed deposit, something which doesn't go, negative in your principal value. You can earn less, 6, 7, 8%, but you would want to put that money into very safe instruments because your need of spending money is only a couple of months away. Then there are long-term goals for the same guy. He would want to see that I want to buy a house. I'm aspirational. I want to use expensive mobile. Nothing bad in that. You earn. You need to live your life. Then you need to buy a car. You have a family. So when you have midterm to long-term goals like retirement, like today, I might be thinking about 20 years from now I need to retire. So I need to put those savings aside in that fashion. You can't afford to take risk every time. So you can choose equity, mutual funds, or you can start a SIP for long-term savings. So that will bring stability. So if you're a freelancer, for people in the group or otherwise, if you're a freelancer, you're doing something on your own, you have started a consultancy, then probably you don't have a you have a variable income, you don't have a steady income coming. So those kind of people should be slightly conservative in approach. Understand, there are certain asset classes which grow faster than other, but their volatility means aaj up and down aayega. And if I need money after a few months or every month to support my family, if I'm a freelancer, then my risk taking capability has to be lesser. So if you have a steady salary and you have no major responsibilities like the group I am addressing today, then you can afford to have, higher equity allocations or exposures. So don't, does my investment strategy match my life situation and my emotional quotient is what you should ask. And my final word on risk from evolving risk is that there is no one shoe good for everybody. I mean, risk tolerance is not fixed forever. When I'm young, um, I may think differently. After 10 years, I may think differently. And then rather, when you have a lot of money, again you think differently, whether you are in any age profile. आपके पास ज्यादा पैसा होगा तो आप ज्यादा रिस्क लेना चाहोगे, यू वुड आप डेरिवेटिव्स भी ऑप्शंस भी करना चाहोगे फ्यूचर भी. सो people think differently when they have different quantum of money, when they have money beyond their needs, their risk tolerance, their risk profile change. So it is very dynamic. So you may be required to read personal finance websites, pages, consult your financial advisor who can cut the noise, who can tell you, don't just, watch television, because by the time the story is already over and then you invest, and while you invest, then, another journey in the market starts. So your risk profile evolves over a period of time. You need to sit and understand and accordingly change. So at 22, you might be very aggressive. At 30, you may not be. So, and in the summary, whatever long shot I said, to all the students and young professionals who are listening me today here, don't follow the crowd. Invest according to your own risk profile. There are tools which I mentioned to understand that. Go through that. Sit with an advisor. Try to understand you are a conservative or a moderate or an aggressive guy. And with time and quantum of money, that changes. So accordingly, you need to make changes. Second thing, use online tools and to understand your risk tolerance. आज कम पैसा है, 10% भी हट करेगा, कल पैसा बढ़ता चला जाएगा. You can use that money. You need to use that money after 2 years, 3 years. अगर वो आज नीचे गया है, आपको फर्क नहीं पड़ेगा. Again, I will again pick up examples from COVID. January of 2020, markets were at its peak, best performing markets before that. Suddenly this came. Markets went down by 40%. Large cap, top 100 companies in India went down by 40%. There were people who panicked. They invested into equities, didn't understand their risk profile well, but they were smarter people who said, I am a long-term investor. Why should I panic? Abhi jo ho gaya, let's. क्योंकि ये ऊपर नीचे चलता है. Markets go up. If they go down, they have to go up. Reason, very simple. Equities are slave of earnings. That's an important phrase. Equities are slave of earnings. If our corporate India is earning well, like, next year, corporate earnings growth is expected to be 5 to 15% plus 7 to 8% inflation. We are talking about 23% growth. So when you know that, you will not panic. Then there will be smart money who said, I wanted to buy these stocks. Now they're available at discount to me 20, 30. You go out shopping and do that. Sometimes you buy those stuff which you may not need today, but for future you go and buy because it is available at discount. Don't leave this, discount quotient when you're investing. Be very aware of it. Be opportunistic sometimes. Buy good companies, hold them, and, create your wealth. So this is what I meant by, your question on risk profile.
Mr. Mehrotra, thanks for letting us know the importance of risk appetite, and especially for the statement that our risk appetite is not only based on the age group we belongs to, but
Yeah,
on the
absolutely.
other things as well. Because as per my perception also, always people tells us that if you are younger, you have the more risk appetite, you can take more risk and have more returns. But there are other bases as well where you have to think, and accordingly you have to decide what risk taking capacity you have. My question to you is, what common mistakes do young investors like us make while evaluating our own risk?
Sure. Again, a related question, but I would try to answer it differently. But bear with me if there is any repetition in my thoughts. See, risk is a natural part of investing. How you perceive and respond to risk, that makes the difference. That makes all the difference. So many young investors, get it wrong at the start, not because they are careless, but because they lack awareness and certain guidance. First mistake is we confuse between risk and volatility. Now, what is volatility? You see a pendulum, no? Pendulum can go both ways. This is mean 5, 10, 15, 20, 30%, minus 5, 10, 15, 20, 30%. Does that mean you have lost your money when it is going down? No, because it is going to come back. Equity is a slave of earnings. They will grow. After some time, prices will follow earnings. So, risk is a permanent loss, but volatility is mostly your friend when you're earning, when you're investing. Why do people do SIPs? Do you know what is the book? Any guess? What is the monthly SIP which is going by million? All the investors in the market today. Volume. Okay, I'll answer it. If you don't have an answer to that, 45,000 crores of money goes into equity. Equity means what? Investing into a company. Various companies, a portfolio of various companies, whether you buy stocks or whichever way you do, 45,000 crores. So, volatility means ups and down. It is temporary, it is not permanent. So, risk is the possibility of, permanent loss or or not achieving your financial goal sometimes. आपको पैसा बहुत सारी चीजों के लिए चाहिए था, but आपने डाल दिया very slow moving assets like fixed deposits, जहाँ पे 8% मिल रहा है, we are very happy, और 6% इन्फ्लेशन है, so net earning is 2%. और अगले साल अगर ऐसा हुआ कि अगर महंगाई 6% है और 6-7% का एफडी मिल गया, तो अगले साल जाएंगे वो, you know, the shopkeeper will tell you, boss, you need to spend more money to get the same stuff. You thought I should have bought it last year. Why did I save, put my money to banks? So when you're investing for long term, you need to be greedy, but you need to be smart and intelligent. So do research job. So probably volatility and risk is the first biggest thing which you get confused with. So sorry, smart investors stay invested. They don't feel nervous. They don't sell too short. The second mistake, which when we do here is overestimating our risk profile. I am young, I can take risk. But when the market falls, we panic, we withdraw, we stop our SIPs. We should not stop our SIP because the benefit with systematic investment plan, systematic means discipline. It is buying at every cycle of the market. I had, 100 rupees to put money. That was my saving. And then I would have 10 to 15 rupees to put every month. Should I start my journey by putting all 100 in one asset class or in the market in one point in time? No, we can spread this money over a long period of time so that I am buying high, I am buying low, I am selling high, uh, uh, I am buying low. So this is what SIP gives us. So when a market actually falls, they see the portfolio in red, they panic and they stop their SIP. You shouldn't be doing it. Well, it is okay. Emotionally, if your investments drop 20%, is it okay to feel? Be honest. Don't pretend to be aggressive just because your friend said that I have earned 20%, 30% return. Don't get aggressive. He would have different plans in life. He's investing for long term. You might be saving for next 2 years. You might be saving for next 6 months. I give you an example. You want to buy an asset and that asset has a price and you need to pay that. You have that money today, but you want it to grow. So you can do an asset allocation, some less equity, more of fixed income. But when you are a long-term investor, the order changes. So be honest with yourself. Don't pretend that your friend has made certain returns and you should follow him. Then the third mistakes we do is that we blindly follow trends. There are certain hype stocks. सब लोग न्यूज में उसके बारे में बात कर रहे हैं. This can go up 30%, 40%. Honestly, I have seen this space very closely. A lot of my batchmate friends are in news channels, economic news channels. They read news, they do analysis. But when you sit with them, this is a market. You Sometimes there are hidden motives and incentives for these guys to speak about certain things. There are a lot of influencers who do great chat, guide you, but they're all kind of people. So once you are wanting to find an investment theme by looking into news channels, the hype, the story is already gone. Everybody knows it. Disinformation se paisa banta hai. What fund managers, what is their, let's understand the role of fund manager at this point in time, or people who manage money, who only manage money. They only devote time in this. They invest into those sectors and companies ahead of times. They see misinformation available. आज अगर हम सबको पता है कि this company is to grow by 50%, उसके पास कुछ ऐसा ब्रह्मोस का एग्जाम्पल, आज इस कंपनी के पास ऑर्डर आया है 10,000 करोड़ का, this company price will go bonkers. Everybody knows you will buy it expensive, but somebody who knows what is the trend in the market, who researches it, will make a lot of money. So stay put with these kind of guys. So don't go after hype stock. It's a first mistake which we generally do. I've also done that. I've also lost money. So out of that experience, I'm saying it to you. Then one example, something which you don't understand, don't invest, boss. मुझे अभी भी क्रिप्टो करेंसी समझ में नहीं आती है कि आज एक बिटकॉइन 1,000 से 1 लाख, फिर 5 लाख, और 5 लाख से सडनली हाउ कुड इट लूज वैल्यू दैट इट बिकम्स 50,000. मुझको नहीं समझ में आता. There are a lot of governments who don't understand. There are various nuances. They understand that we are not financially so literate. We are not so educated about this asset class. So if you are not, even if you feel equity is a threat, first understand you're doing what you're doing by investing into that. You start with bank deposits, at least you save, and then investing means to grow only. So अगर आपको कोई चीज नहीं समझ में आ रही है वहां पे, whether it is cryptocurrencies, I would advise you stay put. Don't follow the trends. Sometimes we are tempted, but stay away. Penny stock means 200 300 400 करोड़ की कंपनी है, अनलिस्टेड थी, लिस्ट हुई है, उसका बिजनेस देखते हैं पहले ना. अगले 5 साल, how does it survive in the strong current of competition, moat? Somebody who has a leadership position will kill the smaller companies. So let's see how this company grows over next 5 years, 10 years, over a decade. You think that they have a strong business and they're growing, domestically, internationally, and there is a story to it. You've heard about it, you have read their financials, or somebody whom you can rely says that the company has good cash flows in future. Then invest into those, but don't fall for 5 रुपए 6 रुपए का स्टॉक है, कल सुबह डबल हो जाएगा. I would not take names of these companies on the webinar, but they are very good banks, who have stayed put around 15, 20 rupees for the longest time. And you thought a bank is available at 15 rupees, 18 rupees, I should buy it. You rather buy an expensive bank. ICICI बैंक 800 पे खरीदा, आज 2,000 हो गया. HDFC बैंक आपने 1,600 पे खरीदा, 2,000 हो गया. आपने कोटक बैंक खरीदा 1,200 पे, 2,000 हो गया. So these are banks, established banks. So don't fall for something which is cheap or which is penny in the size. Sometimes it can hurt you badly. You can lose all your assets. Sometimes we get so irrational. A friend of mine working in Big Four got, swayed. He invested all his money on one stock. He lost 70, 80 lakhs over a period of next 1 year. So that kind of risk we should not take by following certain trends blindly. So never invest in something that you don't understand. Thumb line. Trends can come and go, but your money deserves a good research and responsibility. Then, fourth mistake, we ignore our goal alignment. A lot of investors take high risk without considering, without understanding why are they investing for. For example, if you are saving for a trip 6 months from now, putting money in equity would be risky. The markets might dip from here. They can again recover. They can recover after 8 months. जब रशिया यूक्रेन हुआ, markets recover after what, 18 months? And in 3 months, it gave you that return, which last 2 years, it compensated so much better. Since the time the president came in US, markets are very jittery. वो क्या खाएंगे, क्या सोचेंगे वो, उसे global politics पे, economics पे क्या फर्क पड़ेगा, tariffs पे. Markets have been lying low for 9 months. And believe me, from September, which was high of the market, till I guess the end of March, markets were only following, FIs were withdrawing money. Rather, all of us, through SIPs and domestic investors were putting money. We were very resilient. India is a very strong and good market, but still we were not able to make money. Then came a time, April, May, June, markets went up 20%. There are certain sectors which grew by 40%. There are certain companies which almost doubled in 3 to 4 months. They're small cap companies. They're larger companies, almost, loss which they saw for 18 months, 18% over last 9 months, they recovered in 2 months. So that is the nature of the market. But Your short-term goal was to go on a trip, a leisure trip with your family. And if you had put that money out of a greed into those stocks, and if it has gone down and you wanted to pull that money out, your trip is gone. It is ruined. So uh, don't ignore your investment strategy should align your investment goals. You have short-term goals, you should carry low risk. If you have long-term goals, don't play safe. Accept higher risk and put into investment options which can compound over a period of time. Then, fifth mistake I would say, and the biggest mistake again, with which I started, that we skip building an emergency fund. What if, what if in for next 4 5 months, there is a health reason, or I may not be going to my office. There is a leg effect. If I go to office after 2 months, 3 months, I need time to recover. A lot of things have gone, so I should have that 7 8 months money. People who are going for higher studies, and after higher studies, when they go back to job market, they want to find their dream job. A lot of offers are coming to them, but they want to wait for it 3 to 4 months, and they have families to support. Before going into that zone, they should save emergency fund. So don't skip the emergency fund. Then another mistake which I think all of us do is misjudging the horizon. Young investors, young professionals think that we should make quick returns, but we have a long term horizon. That doesn't happen. When you're 25 years, you actually took that much of time. It is, you didn't turn up that in 25 days, 25 weeks, 25 months. Likewise, any business would grow with certain time frame. आज से 10 साल पहले देखो, Reliance was not 10 lakh crore or 12 lakh crores. It was 1 lakh crore. It took time to come at this stage. Infosys, it nowadays has spread over, their financial services are being, their software services are, spread across 100 countries. But it took time. So don't likewise, you also don't misjudge your investment horizon. You start SIP and expect them to grow and double in a year. That, I think, that would be the biggest fallacy, mistake that we would do at the start of our investing journey. So when it doesn't happen, then you feel dejected and you withdraw. Another mistake which you do when you misjudge your time horizon. So remember, equity is a long-term asset class. 5 years, 10 years, 15 years, it multiplies. I mean, there is a simple rule of 72. 72 says, if you want to see how much time it takes to double your money, and if you put 3 years, you're saying that your money has to grow by 24%. And if that's your objective, you have to choose investment assets which grow at 24%. If your assets are growing by 10 to 15%, you are a moderate investor. And if you want to calculate in what time horizon my money would double, rule of 72, 72 divided by percentage. Earlier, 72 divided by 3 years, 24. 72 divided by 15% today, you would take 4 years, roughly 4.5 years to double your asset. Imagine if your money is working harder than you don't need to worry. क्या होता है ना, जॉब मार्केट में हमने भी देखा और आप भी अभी देख रहे हो, वी माइट बी गेटिंग 8 10 12 15%, it generally 8 to 12% of growth in your annual salary. But if your money is hurting, working harder than you, then this cushion of 5 6% extra over your annual growth, you'll be happy that at least your total money, salary or your income is growing by more than the increment in your salary. So your money has to work harder. If that doesn't happen, you'll be working for your money, and believe you me, you'll have to work all your life to reach certain goals. And एक time आएगा ना जब I don't want to do anything and enjoy my life. I think that belief in mind will never come. You'll always feel stressed. So you make your money work harder. Then another important mistake which all of us do is, we lack diversification. Uh, so diversify, put your money across asset classes. It should be a mix of equities, debt, gold, REIT, structure products, and so on and so forth. Real estate is also an asset class. It has also shown you a lot of green trends. But when you stay put for your with your real estate assets for more than 5 years, I bought a flat somewhere. Now if I were to look at its value, that 20 lakhs has become 35 lakhs, 50 lakhs today. Actually, But if I look back, यार मैं पिछले 15 साल से I'm invested into that. I never bothered to see, उस मकान की वैल्यू कल सुबह क्या हो गई, 6 महीने बाद क्या हो गई है. Because I'm not going to sell it. I know that I need to stay put with that for next 15 years. Probably it's my retirement home. Probably it's for my children, who would turn, 18, 20, would need money for higher education. So I'm stay put with that. Similarly, with every investment asset class, you need to stay put for that point in time. So diversify your risk, reduce your risk, balance your portfolio. Maybe in a summary, Komal, I would want to say what you should do instead is, understand the difference between risk and volatility. Be honest about your emotional limits. How much up and down excites you, upside, and where you panic button presses. You should know that. Accordingly, you should devise your investment strategy and plan. Now, research before you invest. Very important. Don't chase social media fads. मैंने उसमें पैसा कमाया, आप भी उसमें पैसा कमा लोगे. Probably that journey for him is over. He's earned that. You might only earn next 10, 12%. He's earned 15, 20%, 25% of CAGR. So that journey for him is over. You're coming. So do your research or take somebody else's research or read before you put money. And you match your investment with your goals and your timelines. Keep an emergency fund before starting and going aggressive. These are certain mistakes which I would think anybody should note it down and not repeat them. Once is fine, twice is fine, but not again. Yeah.
Thank you so much, sir, for letting us know that what role does actually financial literacy play in long-term wealth management,
Yeah.
and how actually we young adults enhance our knowledge on these crucial topics about financial literacy. So, sir, time is limited with us. I want you to answer to the questions we have in our chat box and in the question and answer section. So there are some questions like someone is asking, I'm in the middle of my life in 40s. And how do I plan for my future retirement, education of my son, etc.? And how to identify that which stock is good or which mutual fund is good to go with?
Yeah, exactly. A very, very practical question. Uh, you know, uh, you are in your, 10, 12, 20 years of your career. You would have started working at the age of 20, 25, 15 years. And initial 15 years, believe me, friends, itni responsibilities hoti hain. We are in hurry. We need to buy a house. बच्चों के आजकल स्कूल में when you start you need to give their fees is about a lakh and a half on an average for a semester. So 10 से 15 साल how quickly it goes in your life. You don't realize whatever money you might be surviving well. जितनी जरूरत पड़ रही है उससे ज्यादा पैसा है हमारे पास. But when real question hits you, my dear friend, the way you asked me, it's very pertinent and probably it applies to a lot of us in the group today. My son would now go for a education in next 5 to 8 years. I need to plan 20, 30 years from now for my retirement. So what do I do? Can I, use my application and give you these examples through calculators? You'll understand numbers and absorb it better. Let me try, if I can share my screen. Hold on, guys, please. Bear with me for a minute. I mean, there could be some setup issues. So let me, I'm on my calculator. I'll give you numbers and then you can hear and understand. I can answer your question. Let's say somebody who asked me this question, I am telling you about lump sum investment, lump sum calculator. Let's say today uh, you have a one-time investment, you have 2 lakhs. I am putting numbers on the calculators. Now you have money for 10 years and you are expecting your money to grow at 12%. Then what you've invested for 10 years is 2 lakh rupees, which will grow to 6 lakh 21,000. So almost 3 times at the rate of 12%. But if you adjust it to inflation of 6%, that 12 lakh has only become 3.58 lakhs. That means 3.6 lakhs. So what I'm saying, this is one lump sum calculator by which you can understand your needs and you can put them there. If I show you a SIP calculator, I come back to your question. Let me just give you some ideas how you can arrive at numbers. Let's say if your monthly savings are about 10,000, you have money for 10 years, you keep investing, and you think your money should grow by 12%, then the amount which you invested is 12 lakhs. In 10 years, at 12% compounding, your money has grown to 23.5 lakhs. There is a gain of almost the same amount, and your money has grown into 1.94 times. So this is how you can grow ideas. What can you expect if you have goal 5 years, 10 years from now? Likewise, since you asked me a question on retirement, let me pull up a retirement calculator here. You are 40. I am putting age 40 here. You want to retire at the age of can I put an aggressive number like 65? हालांकि आज की डेट में we all burn out by 65, but still let me put an age of 65. Till that time I may be working. My current household expenses could be easily on an average is about 35 or thousand. It can be between 35 and 50,000. And if inflation is 6%, and my current savings as of now is about 25,000, or let's say 50,000. I have 5 lakhs set aside for my retirement corpus. My money matlab I can take risk before retirement. I can put my money to investment which grows by 12% compounding. But after I retire, I can't take that risk. So I would put my money to a lot of fixed income investments which will grow by 6 to 7% or 8%. And I have a life expectancy of 80 years. So what I've done here is that 40 years of age, your example, 65 years to retire, 35,000 monthly expenses, 6% inflation, 50,000 current savings, 5 lakhs corpus for my retirement, 12% that my money can grow pre-retirement, 7% my money should grow post-retirement, and 80 years of life expectancy. You'll be surprised that 1,50,000, your monthly expenses at the age of 65 will grow to 1,50,000. You would need 2.5 crores, 2.53 crores at the time of retirement as a corpus to survive the age of 80. And but best part is that you already have total savings. What you invested today will compound over a crore plus. So this is how if I were to answer your question for retirement, you can approach it. And then within that sub question will be what kind of portfolio. I think I would advise with financial advisors like me and other people who are around you, whom you can trust, go and sit with them. They will tell you where to put money within equities, what kind of large cap, mid caps, flexi caps, thematic funds, small caps. If you're putting money to bonds, there are fixed deposits traditionally. Then there are new age investments like you buying a bond of Muthoot, HDFC Credila. You buy a perpetual bond of banks, which can offer you 8.5% quarterly income, which can help you with your cash flows. So this is how, my dear friend, you can build your portfolio. I can choose to give that you should. You're 60 years, you're 40 years, you can have 55% money going into equities and rest into fixed income. That is how you can build your portfolio. Yeah. Thank you if I could answer that. If I could have answered that.
Thank you, sir. Yes, you had answered it very well. We got to know so many things. So quickly, we need to answer more questions because time we have a constant of time. So quickly, we need to do it. One of the student is asking one most interesting question, which always comes into my mind as well. Real estate, if we talk about, has a higher number of returns compared to other investments. But there is a debate whether a young aspirant, especially in India, shouldn't loan and rather rent out until we have the corpus for it. What's your take on the same?
Sorry, can you repeat the last line? Loan se pehle aapne kya kaha?
It's like in India, we should not loan and take. We have a corpus for it until we have a corpus for it.
Okay,
so
got it.
Your take on it?
Yeah. I think, see, again, you need to compare how an asset class. We talk about equities growing, which grows with time. real estate, gold, bonds. They have their own risk profile and they have their own, low and high earning cycles. Obviously, equities give you the highest equities compound if you take 15-year, 10 to 15-year data. And I think you are in that life stage where you can plan for 20, 30 years. The most important will be to, invest in equities, take a loan at 7 to 8%, which is available today. Use your corpus, to grow wealth. And obviously, there will be certain EMIs when you have started working. You can pay your EMIs first. Bring a, अच्छा important thing which I remembered. आपने सबसे पहले अपना EMI दिया, आपने emergency corpus build किया. I would rather say first thing which you should do is, you should buy a health policy. You should buy an insurance. आज insurance क्या होता है? It's a bridge. You know, यहाँ से आपके ऊपर रिस्पॉन्सिबिलिटीज हैं. हम सबकी बहुत इंपॉर्टेंट इमोशनल कनेक्ट है हमारी फैमिलीज के साथ. If they don't see us for 2 days, they will not be able to sleep. Imagine if you're not around. बट अगर ऐसा ना हो, बहुत सारे लोग कोविड के बाद सडनली चले गए. आई हैव लॉट ऑफ एग्जांपल्स. यू वुड आल्सो हैव दोस. उनका सारा लिविंग स्टैंडर्ड नीचे आ गया. सो यू शुड बाय दोज इंश्योरेंस, वेदर 1 crore, 2 crore, 3 crore term insurance plan. Don't fall for, where there are a lot of expenses. Term insurance plan, 1 crore, 2 crore. If you're not around, your family survives that. And you can use your money to buy, invest into equities for long term. You can pay your EMIs. Don't do that. Initially, you buy a house. House is something, because it will not yield you anything. You'll be buying a house for self-living. It has no financial value. Unless it's an investment value, where again, rental yields are between 3 and 4%. It will be more judicial or prudent to invest in equities, pay EMIs, and have these things in place.
Yes, thank you, sir, for asking, for letting us know. There is one more question: that what's your advice on health and term insurance for a family of 4 with having two small kids?
Sure. Again, a very practical question. Buy a term plan first, because जो बाकी endowment plan और equity linked plans होते हैं, that you can invest into mutual funds because they operate at very thin expenses. They are direct mutual funds which operate at 15%, 15 paisa, 50 paisa, 1%. But insurance, if you buy equity linked insurance plans, they may have a lot of other expenses, between 5 and 15%. So best is to buy a term plan. टर्म प्लान अगर कुछ इवेंचुअलिटी होती है, इट कम्स हैंडी. उसमें फिर HDFC लाइफ, ICICI Pru, LIC, देयर डिफरेंट होस्ट ऑफ कंपनीज. यू कैन कंपेयर दोस प्लान्स. यू कैन गेट इन टच विद अस. यू कैन गेट इन टच विद एडवाइजर्स अराउंड. तो आपको health plan is very important. आज again, on your age, when you have parents and your family to support, on your age and their age, you should buy a health plan with आज जैसे नीवा भूपा का प्लान है. I renewed my plan just 2 days back. उसमें 10 लाख का कवर अगर आपने पिछले अगले 3 साल तक कुछ नहीं लिया, it can go to 15 lakhs next year without any increase in premium. It can go to 20 lakhs. 10 लाख का आपने लिया और आपने टॉप अप कराया 90 lakhs. उसका प्रीमियम कितना है? 7 से 8 हजार रुपए महीना. If you buy a 50 lakh health plan, it will cost you much. So buy a small 10-15 lakhs. And आज के समय में जो plans आ रहे हैं, my dear friend, if you use this 10 lakhs or 15 lakhs, these get renewed without any paying premium automatically. आपने एक साल में एक health plan को 6 बार भी use किया, आपने premium सिर्फ 10 लाख का ही दिया है. So you can buy smaller health plans, 10-15 lakhs, and then you can buy a top up of 70-80 lakhs, 90 lakhs for a very small premium. So that's how you can plan your health term plans, and you can buy a term plan for insurance and life.
Thank you, sir. There is one more question which is regarding penny stock. How will we judge if a penny stock is futuristic or not?
Wonderful. So there are a lot of, you can do your research. Screener.in. आजकल अगर आप एक stock डालेंगे, Screener.in. A lot of us professionals, use that to, find a lot of things about that stock. उसके cash flows क्या हैं, उनके quarterly results आ रहे हैं, उनके annual results आ रहे हैं, वो कैसा कर रहा है, उनका product क्या है, whether they are in a mode, उनका कुछ ऐसा product है जो बाकी लोग नहीं कर रहे हैं. तो आप उन penny doesn't mean it's bad, but penny के मामले में कुछ मालूम नहीं है, information is not available. That's the only hindsight difficulty today. So invest into those stocks where you can establish at least a history of 4 to 5 years, how it has grown. Because कई बार penny stocks promoters brokers market में चला रहे होते हैं, and it's a trap story. So उससे हटने के लिए, if you have a history of 7 8 years 10 years, even if those are small, 400 500,000 crore companies, you can take a small bet. With 3 4 years invested into that, you see that it is regularly compounding. It is, the prices are not going up and down too frequently, they are stable. Probably you can increase your allocation there, but start with larger stocks where stories are everybody know, which can compound at 15 20% or 10 to 15%, rather something which can go by 20 30% into a penny stock. Don't go for those kind of things today. Yeah.
Thank you, sir. We have one more question, which is more inclined towards one of the investment avenue, which is very important in Indian scenario, which is gold. So the student is asking, which is the better investment, digital gold or gold ornaments?
वंडरफुल वंडरफुल सी क्या होता है दोस्त की हमारे घर में इफ यू आर मैरिड यू कांट स्किप बाइंग अ गोल्ड एंड इट हेल्प्स आल्सो you realize that small investments which are done in physical gold ornaments at certain stages in life later when you have your own children, you give it to them. That helps. But if you're talking about investment, digital makes a little more sense. You can liquidate them at any point in time. You don't have to pay extra cost of making charges. And like gold grew from 1800, जैसे gold 18 to $3,300 an ounce okay in terms of INR, 60,000 and now it has almost 1 lakh plus in value, and you want to sell it, you can just click off a button, you can sell it. Gold has played its cycle. Next precious metal is silver. And then there are other metals also like platinum. So digital avenues are today available, whether you want to buy gold bonds, you want to buy units of gold, क्योंकि वो लोग भी यही कर रहे हैं, ETFs के अंदर exchange traded fund भी gold, physical gold ही buy कर रहे हैं. So probably in this age of today, digital investment may make more sense because of liquidity and tax efficiency than buying a gold. At the time of selling, you pay certain charges. At the time of buying, you pay certain charges. You can avoid that.
Thank you. Sir, every one of us know that what SIP means to be when we talk about mutual funds. One of our students is asking about SWP, which is more relevant to withdrawal. So please let us know about that.
So there are many investors in my fold, who are senior citizens, and now they don't have regular flow of income coming. Renters, of course, a lot of these incomes, but they want certain fixed income coming out of their investments. They want to enjoy fruits of their investing. क्या होगा जब आपके पोर्टफोलियो, आपके इन्वेस्टमेंट ने 3 से 4 साल लगा लिए, it has grown by 20 30 40%, it is very healthily compounding. Now India is growing from 10th place to fourth to the third economy banega. All these companies will massively grow, and you've invested through mutual fund into those companies. But it has grown. See, taking out money is equally important. So SWP is that tool. जैसे आप systematically invest करते हैं on a certain date, it is deducted out of your account. Likewise, you can fix systematic withdrawal plan in two ways. आपने एक फिक्स अमाउंट डाल दिया, आई नीड अ 1 लाख ऑफ रुपी 20,000 25,000 every month, and on a certain date that money comes, your portfolio, your scheme redeems and it comes into your portfolio. Second option is you choose that only that money should be redeemed which has grown above the cost value. आपने 5 लाख डाला था, वो 8 लाख हो गया, ऐसा ना हो मैं विड्रॉ करता जाऊं वो 5 लाख भी रिडीम होना शुरू हो जाए. So there are various ways for SWP, and you can choose any of those basis your requirement.
Thank you. So it is a better plan for retirement, as we can say that. As
anybody, I mean, I would say anybody. Yeah. Money you are investing to take it out someday. आपने वही पैसा कमाया है जो आपने अपने हाथ से खर्च किया है. बाकी तो आप किसी और के लिए छोड़ के जा रहे हैं. जैसे आपके बच्चे अच्छे हैं, they're smart, you give them an education, they will earn on their own. So you also should be taking fruits out of your own, initial investments.
It's a great line, but in Indian scenario, our parents won't understand this. This is like हमारे यहाँ तो यही है कि आप छोड़ के जाओ दूसरों के लिए. This is the in Indian scenario which is
not far. आज आप देखो, आप जो कह रहे हो, I would agree, and I would also give you trends. आज की डेट में how many Indians, आज आप आज कितने सारे लोग, we spend billions and billions of INR की नहीं, मैं डॉलर्स के टर्म्स में लोग डेटा कलेक्ट करते हैं, बिलियंस एंड बिलियंस ऑफ डॉलर्स वी इन्वेस्ट व्हेन वी गो आउटसाइड, वी आर frequent travelers everywhere, you see a match, cricket match.
Yeah.
So many Indians are in different parts of the geography when we go and sit there. हमको देखना है जाकर. So we are spending money, but जब ये जो per capita income है, जब हमारी बढ़ती चली जाएगी, and our markets will give us, economy will give us so many opportunities to get job, then this worry on parents will substantially reduce. That उनका जमाना कुछ और था, उन्होंने जितना स्ट्रगल किया है पैसा कमाने में, आज हम और आप नहीं कर रहे हैं. बिलीव यू मी, आज फॉर देम our children would be starting at 10 lakhs,
Yeah.
5 lakhs.
And I think एक चेंज जो हमने देखा है, एक द चेंज इज सीन नाउ, मतलब वो दिखता है
Yeah.
डिफरेंस. या सर, देयर इज वन मोर क्वेश्चन व्हिच इज मोर
Please.
टुवर्ड्स द टेक्नोलॉजी. One of the student is asking regarding the benefits and drawbacks of robo advisor. As you can see, there are some robo advisors, there are some
Yeah.
chat GPT sort of things. They are advising us to do this. So what is your advice on the same?
Okay, can I, in answer to this question, I can put a question back to the gentleman and to everybody. Do you think a robo doctor can treat you? आपने अपना हेल्थ रिपोर्ट डाला ऊपर और खट 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 करके आ गए सारे कि आपको ये विटामिन, इतने इंजेक्शन, इतना लेना चाहिए. Yeah, it works a lot of times. It is future. Obviously, it is future. When we don't have time to meet each other, when we are in our own cocoon, probably that would be the only way to think about investment strategies. But जब आप किसी के पास जाते हो, when you talk to him, like you go to a doctor, you explain what's happening, what is been your health experience over last few months and years. He understands you, and accordingly he treats you. So आपके thought process, aspirations, आपके advisor समझ में आता है. So one-on-one is always, as of now, is better. But when we'll be very hard on time, we may not be able to meet anybody. We are sitting in a company guest house, or plants way far. Even then, you can connect to each other on webinars, or one-on-one Zoom, and you can tell him, and then he can devise your plan. You can call him up, hey, you said something, but it's not going that way. What to do? I want to increase my, I have more expectations on my investments, where to invest now. So probably that kind of answers, and then you can cross check with robo. That's definitely future. But I think asking money to your advisor, and putting him in a responsibility place will also be equally important for you as a right of an investor.
Thank you, sir. I think most of the questions we have answered, and it will go on if we continue the session. But one of the students, Vijendra Kumar, is continuously raising the hand.
Please, sir.
So
Please.
Vijendra, I'm allowing you to talk. Please unmute yourself and please raise your question.
Yeah.
Vijendra, are you here? Not able to unmute, I guess. Okay.
No problem.
So majority of the questions we have answered, and now it's time to conclude the session, which was very, very insightful. Thank you so much, sir. I want to emphasize that financial literacy is one of the most empowering skills a young individual can acquire for. It's not about being perfect with money from day one, but about being intentional, informed, and consistent. Start where you are, use what you have, and build habits that serve your future. Heartfelt thank you to our expert, Mr. Sheel Mehrotra, for sharing your practical wisdom and making complex financial concepts so accessible for all of us. Your insights on asset allocation, risk assessment, and the importance of early planning have truly enriched today's conversation. And to all of you, my dear students and young professionals who joined us, thank you for investing your time in learning how to future-proof your finances. Keep learning, stay curious, and take charge of your financial journey. Wishing you all a secure, prosperous, and financially aware future. I'm having one more announcement for all of you. Mr. Pankaj is pasting one link, which is of feedback. Please write what you felt regarding this webinar. We are open to answer. We are open to, overcome with all if we have anything. Mr. Sheel, I would be requesting you if you can share your contact number with our students in the chat box. If they want to
Yeah,
connect with you in near future, your contact number and mail ID, so that you can answer them for those, especially
so
whose questions are unleft. Thank you so much.
definitely.
Thank you, all the participants. We are waiting for your feedback. The link is there in the chat box. Thank you, Pankaj. Thank you, Aparna ma'am. Thank you, everyone from our team. Uh, and spending your time with us on a busy on a weekend. Basically, it is a Sunday, which is your time for your family. So, thank you.
I'll just mention my email ID here.
Yeah.
I have a team who will be happy to assist, get in touch with you, and answer your questions. And you can find me available on this number anytime. We can get connected over WhatsApp, one-on-one call, and I'll be really happy to answer your questions. And my team will also, send across certain informative materials for you to read, particular topics you want to understand. We can connect again. And thank you very much, Komal and UPES, for giving this opportunity, on a Sunday morning to connect with brighter minds who are going to take all of us to the next, third place, second place in the world. Let's be proud and keep investing. Thank you very much.
Thank
Goodbye.
you so much, sir. Thank you. Goodbye.
Yeah.